People move like these everywhere across Nigeria. But when it is sunset, all of them are off the road. They all go to seek for shelter. And for all of them, a home is a necessity. Nigeria is a free market economy. In 2020, the real estate industry contributed 5.66% to Nigeria's gross domestic product. The reward for taking risk in providing homes for people is profit, and home developers and financiers understand this and the importance of home ownership to mankind. Mortgage is finance, a long-term financing for real estate ownership. It is a financing intermediation acceptable in the property industry. Historically, a land transactional process that began in England during the Middle Ages of 5th to 15th century. Mortgage is not for property construction, it is for property acquisition. Across the world, the mortgage practice has been proven to be a means of owning a home. For a Nigerian working class, renting or owning a home should have come easy, but this is not the reality. Mortgage is a loan. An ideal mortgage process is when an interested party wants to buy a home. The interested party then approaches a mortgage institution. The mortgage institution pays for the home on behalf of the party, and in return the party pays back the mortgage lender both the principal and interest depending on the tenure. The eligibility for mortgage is a proof of steady income. With over 200 million Nigerians, the search for comfort and peace at the end of the day's hard job is the desire of many. The Nigerian population is growing. Access to decent housing and ownership seems to be for a few. Shanties are emerging without amenities, creating poor health and leaving people without capacity to contribute to nation building. The housing deficit in Nigeria is not known, but housing agencies and policies have been in existence for many years. Until the housing deficit is known, Nigeria's building financing plan policy will be inadequate. With the upcoming census, the country can now gather accurate data on the housing deficit. There is no nation where everybody owns a home, but there must be affordability for home. People may not start from owning homes, but from rentals, although there is no efficient apartment rental process in Nigeria.
You don't invest in apartment housing with short-term funds. It's not possible. So that enabling environment is not there for rental apartment housing regime to kick off properly. Because if it kicks off properly, people should be paying their rents on monthly basis.
The everyday finance principle of mobilizing savings for investment is still the backbone upon which mortgage is built. And for many years, Nigeria has been practicing mortgage financing.
In most developed countries, people can get mortgage facilities for as long as up to 30 years or 35 years. And then, of course, most times it's single-digit interest rate. But in Nigeria here, we are underserviced.
Commercial and primary mortgage banks offer mortgage directly to customers at rates above single digit, with contributory down payment and at tenure below 25 years. There is a huge private and public sector involvement in all levels of government in housing provision. The impact remains a debate. Here in Nigeria, home delivery is still far-fetched.
In the UK, you can actually obtain a mortgage without a deposit. You don't have to have a deposit. I remember when I bought my first house in England, I didn't have to provide any deposit. It was a zero deposit. In Nigeria, you need to deposit, I understand, about 30% of the actual cost of the house before you are given a mortgage. I thought ordinarily the house is supposed to secure the money that you have borrowed to buy the house. So the essence of actually having to pay 30% upfront which is Herculean for a lot of young people. I think it has to be looked at again. For me, it needs to be reviewed because they kept saying the conditions in England are different from the conditions in Nigeria. Then make the conditions in Nigeria conducive for such thing if you're going to do it at all.
This is the headquarters of the Federal Mortgage Bank of Nigeria, FMBN, the regulators of the primary mortgage industry. The bank evolved in 1973 from the Nigerian Building Society, founded in 1956. The Federal Mortgage Bank is the government organization that manages the National Housing Fund that was established by an act of 1992 as an intervention fund of federal government to help solve the national housing problem. The National Housing Fund is a government-backed up mortgage and different from what commercial and primary mortgage banks are offering to Nigerians. The National Housing Fund is the contribution of Nigerian workers at 2.5% of their monthly salary, which forms a pool of savings from which the Federal Mortgage Bank lends at 4% to the primary mortgage banks for onward long-term lending to any contributor at 6% who desires to invest in home ownership. There is also contributions from federal government as well as investment from insurance companies, commercial and merchant banks into the fund. The National Housing Fund eligibility for 5 million comes with 0% down payment equity and the 15 million with 10% down payment equity. It can be assessed by any working class contributor through an accredited primary mortgage bank to build, buy, or renovate home after 6 months of continuous contributions. This National Housing Fund mortgage has a disbursement period of 88 days, a fixed interest rate for the duration of the loan and lower than the prevailing commercial rates in Nigeria. The Federal Mortgage Bank charges a primary mortgage institution not more than 1% point above its own borrowing rate. The primary mortgage institutions are allowed to charge a minimum spread of 4% points above the rate charged by the Federal Mortgage Bank. Between 2012 and 2016, a total of 18,070 loan applications were approved. Sadly, only 2,967 applicants benefited from the scheme, representing a disbursement of 16.4%, leaving 83.6% of the loan applicants unsuccessful.
The National Housing Fund is not doing well as it should do. It's being managed by Federal Mortgage Bank, which in my own opinion, should have been managed separately. And therefore, the source of long-term funding for mortgages is not there. Now, since long-term funds is not there, you are not going to have successful mortgages. And if you are not going to have successful mortgages, you are not going to have very good, home ownership in this country.
Here in Nigeria, the capital base of a national operating primary mortgage bank is at 8 billion, while a regional operating primary mortgage bank is at 5 billion. But the Federal Mortgage Bank has a capital of 5 billion. There is a low capital base for these banks. A home developer can only secure short-term funds as against long-term, and there is a desire for the developer to quickly meet up with his obligations to its financing lender. The Federal Mortgage Bank lends to developers at 10% interest with a repayment period of 24 months, and these homes built must be sold to National Housing Fund contributors only. With short-term funds available to mortgage institutions and developers, little can be done to support long-term financing. Long-term fund is needed by these mortgage institutions to achieve long-term financing in the mortgage industry.
And then the primary mortgage companies we have set up in the country are also not undercapitalized and therefore cannot afford to create appropriate mortgages. But beyond that, There are factors that militate against efficient operations of mortgage institutions in Nigeria. One is the titling problems or issues, and of course, foreclosure laws that are absent.
Land is a factor of production. Land with title has an added value and can lead the holder to wealth creation and prosperity. The acquisition of title to land supports the operation of mortgage practice. There is a burden of proving land ownership and possession on people. There is a Land Use Act of 1978 in Nigeria, which requires the consent of the governor or the FCT minister for any control of interest in land. With the advent of this Land Use Act, many governors have failed to keep up faith with the importance of title to land.
And the governor can be compelled to carry out the duty that is ordinarily supposed to have carried out. I know that most of the times the duty to sign the CFO is assigned by the governor, delegated to maybe the commissioner for lands. So where these persons fail to carry out their duties, you can approach the court to compel them to carry out these duties. Those are remedies that the court can oblige anybody that merits it.
The process of certificate of occupancy is riddled with inconsistency. Land with certificates of occupancy can serve as collateral for bank loans. In the past, there was family land ownership and control of land vested in families and communities. And once land is purchased with agreements, deed of assignment, and irrevocable power of attorney, these conditions allowed so much to be achieved. A foreclosure law is the legal process that allows a mortgage bank lender to take possession of a house bought with mortgage when the mortgage borrower fails to meet repayment terms and conditions. The attitude of Nigerians in paying debts when due is a problem that threatens the mortgage practice.
The thing was lying at the National Assembly for them to, read and pass it and all that. And of course, I think it passed through the first and second reading or so. But immediately that assembly was over, it died a natural death.
You can foreclose. You can recover by way of commencing civil suits for recovery of debts that is owed the mortgage companies. So there are diverse options open to the mortgage company to redeem or recover their principal sums and interest in any mortgage transaction.
The National Housing Fund mortgage default in 2015 stood at 45%, rising to 59.6% in 2016. Reasons vary from job loss to demise, late salaries, reduction of income, deliberate unwillingness to pay, and diversion of national housing funds by developers. Because sometimes developers build, sell, and refuse to pay back. It is blamed on the terms and conditions from the mortgage providers.
Data is issue because in Nigeria here, if you want to apply for passport, you have to go and do data capturing. You want to apply for driver's license, you do all these. Your data are all over the place. There's need to harness that so that we can track people when they defect. Because what people are always saying is that, when we give them mortgages, they don't pay. They don't pay, but the mortgage was secured against the property. So you can actually take the property back and sell it.
For you to run a mortgage regime successfully, you must be able to foreclose the property if somebody is in default with ease, without too much encumbrance from litigations and all that. And you can't achieve it that as it is now. You can't achieve it effectively, because there are so many loopholes occasioned by lack of appropriate legislations.
There are processes people go through in everyday life which can avail a lot of information about them. A system that trails the credit worthiness of Nigerians can help mortgage practice. The conduct of mortgage providers is also unfair.
I've seen a situation of a house not too far away from mine where they've come to remove the windows and they are from the mortgage company. That's ridiculous. And every time you see the signage on their gates that they actually display how much they are owing. I thought it's a private arrangement. You don't ridicule people like that. You write on their gate that everybody can pass through and say, oh, this house is 145,000 naira. And then the person comes to the house, he comes back, you find that on his gate, he's depressed, he's unhappy, he sleeps and he doesn't wake up again. That's not what we should be doing to ourselves. The mortgage system should, the people in the banking industry and government must come together and make a decision that, look, we really want to give mortgage to people.
One of the hindrances in the mortgage industry is that there is also low process of judicial institutions in Nigeria for any party to secure judgment in good time when business disputes arise, discouraging mortgage practice, especially for the lender. Safe and easy return on investment is a concern for every business. Risk management ensures the mortgage institutions can survive over time for the benefit of the owners and potential customers. What need and quality assessment go into the building of homes in Nigeria? The quality of houses built for the purpose of mortgage financing is a problem. Building of homes must be done to standards. When professionalism is absent, the poor quality of some of these houses become a pain in the neck to some home buyers. People make mistakes when seeking for mortgage, as they often overlook home leaking roofs, cracks in the walls, moisture on walls, termite breeding, deteriorating floors and cupboards, damaged plumbing, and exposed electrical cables. They fail to get tentative approval for TOR before making a down payment on the property, overlooking security, access to transportation, schools, hospitals, and markets. People fail to cite a copy of the deed of the property, thereby failing to have an independent search done on the property to determine if it is free from hindrances. Not having a lawyer for agreement purposes and the capability of repayment should not exceed 33% of the borrower's monthly income. The low income of most employees hinders the ability of workers to access mortgage. This is an estate built and people bought on mortgage. Adewale lives in this estate.
A lot of people own properties there. What we've done is to rebuild. Some of us have to spend a lot of money on it and all of that to strengthen the building. Especially all the houses suffer from water penetration. So obviously the DPMs, the DPCs were not done properly. Look, even the quality of the block form is outrageous. You can't even put anything on your wall. So that's the kind of building that is there. And yet, there's mortgage behind that.
There's always the first time. People can challenge those kind of practices and they'll get remedy. Contracts are binding because before you take possession, there's what they call inventory. You take inventory of the nature of the property. So whatever you see at that point, if you cannot discover any defect, either latent or patent, you take it as it is. And I know that in most standard mortgage agreements, there is always a duty to keep renovating. But that duty is upon the mortgagor. Once in a while, it must carry out repairs to make the property tenantable.
A home can serve as shelter and can also serve as a business premises for the homeowner. A lot of small and medium enterprises began in homes of founders and have grown to become global brands. These are creating employment and wealth for its ownership as well as paying taxes to government. People can also explore their opportunities like mortgage refinancing, which can help reduce mortgage repayment term, interest rate paid, and the benefit of cash from home equity. Mortgage-backed security is also an opportunity for Nigerian merchant bankers. The benefit of a financial mortgage practice is enormous to the larger economy. Some challenges of the industry seem to be known, like the mortgage institutions embark on developing houses themselves without competency in construction. Alternative investment, like government fixed income securities with lower risk and guaranteed returns, attracts banks and insurance firms than mortgage financing. The absence of long-term funds for investment is the reason the industry is always seeking rate in transaction and short-term repayment period, and this is derailing the desire of people to own their homes.
How can you have a short-term deposit of say 3 months or 6 months, and then you want to use that money to loan out mortgage of about 15-20 years? It is a terrible mismatch.
There should be an upward review of the 15 million upper limit of the National Housing Fund. There is a need for these institutions to provide mortgage to seek the path of recapitalization, mergers and acquisition for meaningful impact in Nigeria's mortgage practice. Transparency in land registration and administration can support the private sector to do more. Nigeria's mortgage practice is not delivering up to expectation. Mortgage financing has excelled in many developed economies, but this is not the same in Nigeria. Developing an ideal mortgage practice requires more deliberate decisions from the country's leadership, practitioners, both in construction and in the mortgage industry. There is the construction costs, which impacts negatively on mortgage financing. When a developer buys land and cement for construction at high cost, these costs will ultimately certainly be transferred to the eventual home buyer. Inflation also continues to rise. The cost of building materials remain on the increase as well. Nigeria is import dependent. Developers' reliance on imported building materials leads to high cost of construction. The relationship between Naira and its interaction with other international currencies also has a negative impact on mortgage in Nigeria. There should be more involvement of other materials for construction. For example, materials that were achieved from research findings and not just the use of cement. These can help push building costs down. Government should lead in making use of these alternative sources of building materials in government projects. Most infrastructure are public goods. The burden for provision of infrastructure by the developers leads to increase in cost of housing delivery. Provision of these infrastructures by government can drive housing delivery costs down.
It is a whole gamut of issues, not just one thing that you are going to solve. Yes, it would come through legislation. It would come, the citizens participating effectively in savings.
There are calls for the deployment of pension funds to other areas of the economy. Home ownership is one of them.
How am I very, very sure that the pensions that are going into real estate, will be fully utilized, better utilized to generate better return to enable them to meet the liabilities of pension? It is also another big issue there. That is why most of the monies in the under PENCOM, managed by pension managers, most of it is in CBN. They are under treasury bills. They are under treasury certificates and what have you. Very little percentage, is for long term.
Many years ago, there was no civilization in all of us. People and lifestyle continue to change with society. Everybody desires a home that is functional. A home is a legacy. Outside Nigeria, mortgage is helping many people to succeed. Without an ideal mortgage practice, the strong quest for home ownership amongst Nigerians will remain. Until Nigeria prepares the institutions of mortgage by making way for long-term sources of funding, as well as attracting investment into the housing sector, mortgage finance practice in Nigeria will make no desired impact. A culture of saving among Nigerians can also improve the ability of practitioners to do more in mortgage financing. Nigeria, in its quest to become a leading nation, can at least start from home ownership.